Hi everyone, I'm Angus, one of the directors at Prime Advisory. I've got Nick Schoenmaker from Evidentia with us this morning. So firstly, welcome Nick.
Thank you very much.
So Nick forms part of our investment committee, one of two asset consultants we have from the Evidentia Group. So Nick, there's obviously a few big stories happening in markets at the moment. There's a bit of volatility out there. It seems like most of the headlines are coming from around and based in China. Can you give us some high-level updates on what's happening there at the moment?
Thanks for having me, Angus. And you're right. So the noise has been around China of late on a number of fronts. There's been a lot of regulatory crackdowns in China over the past kind of 18 months, but just more recently, and what's been making news over the last week or so has been the potential bankruptcy of essentially the most indebted property developer or company globally, and that's Evergrande. So no doubt Evergrande Group has been in the paper, and most of the end investors and participants listening to us today would have heard of this company. But just for some background there, so Evergrande is the largest property developer in China. They expanded very aggressively during the property boom. They've got $300 billion in liabilities, and that's in US dollar terms. So that's over $400 billion in Australian dollar terms, which about 50% of their debt obligations are due over the next year. So they're currently experiencing a major liquidity risk, and it looks like they're going to be unable to meet a lot of their operational obligations and coupon payments on bank loans. Now, we've seen construction in China halt, and it's essentially left more than 1 million people wondering what's going to happen with a lot of these properties that they've taken mortgages out for and prepaid. So we're starting to see fire sales in property, and that's exacerbating a market that was already quite fragile because not too dissimilar to to Australia. The Chinese property market's been booming, it's been very speculative, it's been very hot, and in terms of income, it's a very expensive market. The other thing that's very concerning is that property and property construction makes up about a quarter of Chinese GDP. So any rattles within that sector will have broader ramifications to the economy that are not insignificant by any means. Now, we are seeing a lot of discussion in the market at the moment as to whether this is a Lehman's moment. So many of you will remember going back to 2008, there was the collapse of Lehman Brothers, a very big investment firm, and that essentially kicked off the global financial crisis. Now, what we would say as a headline is that we don't believe this is going to be a Lehman's moment. And the key behind that is really the fact that the Chinese authorities do have the tools at their disposal to prevent that from happening. And I'll elaborate on that a bit more soon. But really, we're yet to see where the Chinese Communist Party is going to draw a line in the sand as to how much they're going to intervene or how much they won't intervene. And that's really what is spooking the markets at the moment as to what intervention we will see and how this is going to end, Angus.
Sure. So what at this current point in time, what do you see the consequences being in China? And then obviously Australian market is so leveraged to whatever's happening out of China.
Yeah.
How is that going to unfold, do you think, for us?
Yeah, so the clearest ramification to Australia would be, if China sneezes, Australia catches a cold, and that's really the linkage through steel that is used in property construction. And obviously then that affects iron ore. So we've seen the iron ore price essentially halve since August. We've seen BHP, Fortescue and Rio sell off quite aggressively over just the last kind of few weeks. So the iron ore price has actually now gone below $100 over recent days. So that would be one of the key linkages, is that would be a hit to Australia's national income. But if we think just for a second about the impact to households and investors in China, again, not too dissimilar to the situation in Australia, where we have a big fascination or obsession with owning property. We're seeing similar signs of that in China, where about 50% of household wealth in China is invested in property. So oftentimes there'll be multiple investment properties for people that have been able to afford that. So again, there's been some massive protests just over the last couple of weeks at Evergrande's head office. So the social ramification of essentially falling behind on the property project delivery could be quite disastrous. And the Communist Party in China does not like social instability either. Yeah. Another impact to, again, the end investors in China is that Evergrande had been issuing these high yield investment products, oftentimes through private banking channels, and sold to their own employees. And they were very high yield with plenty of disclosures around the risks associated with these products. But again, that's another potential kind of ramification to the local investors in China. You know, they've paid for these properties or prepaid part of the properties. They've taken out mortgages, and oftentimes they've also bought some of the investment products issued by this group as well. So you've actually seen how house prices in August fall about 20%. Oh. And as I said before, just given the exposure to property as a proportion of household wealth in China, even a 10% fall was very material. So a 20% fall is starting to have some consequences to the real economy in China.
Sure. And I guess the real question is, well, what type of flow-on effect does that have to the rest of the economies out there, not just Australia?
Yeah. I mean, we use the term in financial markets of contagion, and that's whether something becomes a systemic event. And if an event is systemic, what we mean by that is that capital markets more broadly, global equity markets could be affected by some of these major events. And, you know, there is no doubt that Evergrande is a systemically important developer within China. A bankruptcy would cause problems for the entire property sector. There would have to be debt recovery efforts by creditors that would lead to fire sales, panic selling. And if you look at just what's happened in markets so far, you've seen the share price of Evergrande drop about 90% since June this year. And a lot of its bonds that are traded in the market have just gone from par value back in June down to about 20 cents in the dollar. So it's essentially saying the market is now pricing in their bonds are going to default. So the risk is that if there are bond defaults, the Evergrande debt makes up about 15% of the sub-investment grade or the high yield bond market in China. So there would be consequences or flow-on effects to the bond market locally and then potentially globally. What I would say the differences are between the Lehman Brothers situation that we had many years ago and Evergrande is that the global linkages are incomparable. Lehman Brothers was intertwined within global financial markets from a number of different ways. Evergrande is not. It is more of a Chinese problem. There are some offshore owners of their bonds that are likely to now face significant haircuts of owning those bonds. But the global contagion is likely to be a lot lower, well managed, if there is an orderly restructure of the debt and intervention by the Communist Party, which we ultimately see being the most likely scenario.
Understand. So I guess in wrapping up then, Nick, does China intervene? Do we think they intervene? And do we need to be making any changes to portfolios, or is it just to sit and watch at this point in time?
Yeah, so China has been intervening in some kind of indirect ways so far, as that they've been injecting liquidity into the financial system just to make sure that bond markets are still functioning. The other thing I would say, Angus, is that China's government is not averse to taking companies over from the private sector. It seized a bank back in 2019, and what we believe to ultimately be a debt restructuring process will not be too dissimilar to what we've seen with other kind of high-profile bankruptcies in China, where essentially what tends to happen is the government will appoint a state-owned enterprise as a liquidator and then look to restructure the debt over a number of years, usually over a period of 2 to 3 years. So in terms of, exactly where to from here, one of the major tests is actually today, and we have been reading just overnight and yesterday that it does now look likely, which is a good sign, that Evergrande might actually meet some interest payments or coupon payments on their bonds that are due to fall today. And prior to that, it was almost assumed in the market that that would not happen and you'd have a technical default. So throughout September alone, there's about $160 million, I believe, of coupon payments that are due, and quite a significant proportion of that is due this week, today. So that'll be a good telltale sign to see what's to come. At a very high level, I'd say, look, we are monitoring the situation. We continue to watch the news flow, the impact to capital markets, and decide whether there needs to be any altercations within our portfolios. For now, we do think it is going to be contained, that China will step in and they'll face increasingly pressure to do so over the next week. But for now, we've looked at our exposures that we have across our book through our clients' portfolios. We don't have any exposure to the firm directly. For the fund managers that we do use that invest in areas like emerging market debt, for example, they've been very proactive in using different forms of hedges that they can put on to protect against volatility that we might see within sort of emerging market bond markets or even equity markets. So we're feeling like our portfolios are well set at the moment. But again, we continue to monitor developments daily and will take any action if need be.
Perfect. Well, thank you, Nick. I'm sure you'll be back with everything that's happening in markets at the moment. There's bound to be more stories. So
Absolutely.
Appreciate your time, and we'll chat again shortly.
Very welcome. Thank you, Angus.